Brother Dog Finance is back, and today we are going to take a look at the FSS model top picks under the NASDAQ Technology Index. And firstly, here are the ones: the AMAT, Applied Materials, CSCO, Cisco System, and LRCX, the Lam Research. And as a reminder, for those guys who are not familiar with FSS, it is basically the factor scoring system. We update the score of each company by taking a look at 5 different aspects of it: the relative valuation, the business quality, growth potential, the market momentum, and the low volatility. And in the end, we aggregate these 5 scores to a total score, which measures the attractiveness of the company from 0 to 100. We cover different indices under different tabs. For example, SPY is covering the SP 500. QQQ means NASDAQ 100. IWB and IWM are standing for Russell 1000 and Russell 2000 ETFs. Today we are going to focus on the QQQ tab and under the technology sector here. So these are the 3 names that we just highlighted. You can see they all have a pretty good total score here, well above 7, where the highest under the NASDAQ index is only 80, which is already automotive. However, that is not under the technology sector. Why these 3 names look attractive is because their valuation and business quality score look very high. We especially mention these 2 factors because based on our historical study, these two scores in general have better return predict power compared to the other 3. And that is also why we give higher weights for these 2 in our total score. Let's firstly take a look at the value score of these 3 companies. Under the valuation matrix, one of the indicators we are closely monitoring is the earnings yield, the earnings divided by the price ratio. Average of these 3 companies are standing at 5% versus the NASDAQ index of 3%, almost doubling that, indicating the relative valuation of these 3 companies are very attractive. Another indicator we are looking at is the EV divided by EBITDA. The ratio for these 3 companies is around 15 versus the NASDAQ 100 index of 30. So the 3 companies based on the matrix here are saying these companies are being undervalued. While the buyback yield, the shareholder yield of these companies look reasonable as well. And all these metrics are making the valuation of these 3 companies look very attractive. And then it's the quality score. One of the quality metrics we're looking here is the asset turnover. Average of the 3 companies is around 80%, while NASDAQ index average is 70%. So these 3 companies are running their business in a more efficient way compared to the overall NASDAQ average. While the return on assets, the return on invested capital, and return on equity of these 3 companies are above the NASDAQ average as well. These metrics, of course, combined with some other quality scores that we covered in the spreadsheet, are making the quality score of these names look very high as well. The growth score here measures how stable the companies are growing their business. While here, we're not going to dig very deep into the growth score because we know this score compared to value and quality doesn't have a very strong return predictability in the future. The last 2 indicators or the scores here are the market momentum and low volatility. These 2 together are helping us to pick the right stock for ourselves that fit our investment style better. The momentum score is indicating how well the price momentum, the price of the stock is doing recently. A higher score means the better uptrend the stock is under. While for the low volatility score, higher score means a less volatile stock price pattern for the stock. So if you are an investor that wants stable price appreciation and low price volatility, you should look for stock with both high momentum score and low volatility score. And that is the FSS model weekly update for the NASDAQ index. The Google spreadsheet I'm using here are attached via the URL link below. Feel free to check it out, and I will see you next time.